Yeah, Sarah, and Wynn Resorts is announcing it plans to sell the land and the physical assets of Encore Boston Harbor for $1.7 billion in cash to Realty Income. This is a property that it spent roughly $2.6 billion to build just a few years ago. Wynn will continue to operate Encore, and it will pay $100 million annually in rent. Also, it will retain a 13-acre parcel to develop an entertainment district. This arrangement is becoming more common in the gaming industry, but this is Wynn's first foray into this OpCo-PropCo, operating company versus property company arrangement. Also, sources tell me that this will not affect anything to do with the Las Vegas operations, okay? It's just for Boston right now. Earnings, revenues coming in slightly higher than expectations at $1.05 billion for the quarter versus $994 million. Earnings are a miss with a loss of $1.37 per share versus the anticipated loss of $1.25. Of course, this is still Macau COVID restrictions dragging down the bottom line. With adjusted property EBITDA, this is the key earnings metric in gaming, turning up a nearly $30 million loss when the street was expecting a profit of nearly $20 million. On the other hand, Wynn exceeded expectations on EBITDA in Boston and Las Vegas. Spending at Wynn's Las Vegas properties up 34% from pre-pandemic levels 2 years ago. And guests are spending more at the casino. They're spending more on food. They're spending more on their actual hotel rooms. All that despite the fact that occupancy still hasn't quite recovered to 2019 levels. The call starts at the half-hour mark, and then tomorrow you don't want to miss a CNBC exclusive when the new CEO, Craig Billings, joins me for his very first CNBC interview on Squawk on the Street. Guys?